Ladies and gentlemen, welcome back to the High Performance Trader. I'm Joshua EVELVATE, and today I want to break down building an edge that you can actually rely on. See, for the longest time, I traded with tons of fear, anxiety, trying to predict the market, and it always resulted in inconsistent results. And of course it does. Because if you don't have a structured approach that's repeatable, how can you ever expect to get any sort of consistency, right? So tons of traders, right, they think that it's a strategy problem. In reality, it's a philosophy problem, right? They're not approaching the market process oriented, right? Instead, they're approaching the market goal oriented. And I get it. We want to make money, right? We want to do well, right? And we want all this hard work to pay off. But until we can deem an approach that's repeatable, process oriented, and simple, we're never going to see consistent results. So today in this lesson, I want to break down once again my approach in its simplicity, right? And how I use it day in and day out to obtain the results I want to obtain, right? So before we go any further, guys, click the links below, get involved with the High Performance Trader Discord. All the online courses are up there, right? So I'm building the platform to have all the education there. I want all the resources there, right? I want it to be a one-stop shop for traders to come and become the traders that they've always wanted to become. It's a really good team, right? We're really focused on process development and personal development, right? Because it's not always the markets, it's you and your execution and your ability to remain disciplined. So that's what HPT is all about. If you want to get involved, guys, click the links below. Right, so without further ado, we're going to be breaking down July 5th, right? So we took this live on the Discord with the team, right? And it was a really simple pre-market plan, right? So for all my traders on my team and everybody that follows me on YouTube, you guys know how much I love the break and retest. See, market structure is the way the market communicates to us, right? The market can't sit here and tell us, oh, hey, I want to go long today or I want to go short, right? And it's not up to us to move price. We cannot do that. So we must accept the fact that we must sit sidelines and observe market structure to determine the conditions of the market. That's the whole philosophy, right? So once you can learn to view the market that way, in that manner, you can then start to look for market structure to give you clues. Right? So going into this day, right, I had a bullish and bearish scenario, right? So first thing I'm going to do is whip out my 1 hour time frame and I'm going to identify my market structure, right? So this level, 55117, this was previous all-time high, right? If I zoom out a lot further or even use the 4 hour chart, you're going to see this was a massive milestone for the market, right? 55117. And what's this telling us? It's telling us that there's a large seller present at 55117. And by the trend of the market, guys, we've been in a massive bull run, right? So sooner or later, we're going to come back up to 55117. And what happens at this level is going to be our clue, right? So you whip out that 1 hour time frame. You're going to see we get a beautiful break, right? So we on Wednesday, we broke above 55117. And then post-market, we then rallied above it. So now we're getting a gap up. So my pre-market plan is going to go, hey, if and when price comes back down to 55117, I'm looking for two things. A, buyers control this level. If buyers control this level, right, that I can learn to identify through my moving averages, my critical levels, right, which is end of day, previous day high, previous day low, and open print, right, and chart patterns or market structure, if I can observe price action using these tools and deem that buyers are controlling the level, I'm going to be looking for longs targeting pre-market high and above. And then if sellers control this level, right, that's going to give me a way different story, which is now bearish, and I'm going to be looking for short plays down to 550, right, maybe even previous day low, which was 54866. So once again, approaching the market non-biased. Right? I'm not predicting, I'm not going, oh, we're in a massive bull trend, so buyers are gonna rip today. No, we don't do any of that. We go, if this price holds, I target this. If this price doesn't hold, I target this. I need the market to communicate to me through market structure, through moving averages, through critical levels, to determine the conditions of the market. And based on those conditions, I'm gonna put on a trade. Right? So that's my approach. My approach is let the market tell me. I don't tell the market, right? I can't determine what's going to happen. I can't predict what's going to happen. I don't care how long I trade. I don't care how many times I've seen a chart pattern in a zone or X, Y, Z. There's no way for me to know what's going to happen. That's not even my goal. That's not even my approach. My goal is to remain process oriented. We're going to break down the process right now, right? So, okay, we have our bullish and bearish scenario. That's our first step. Our second step is to be patient and let price do its thing, right? So let's check it out. We got end of day right here, right? We have previous day high right above it, right? So let's just go like this, previous day high. Right here, I'm going to go PDH. Okay, previous day low is all the way down at that bottom. Here's our demand zone, right, that we got from that 1 hour time frame. Let me make it green. And I'm making it green here because it's a bullish chart pattern, right? So on that 1 hour time frame, that's a bullish break and a bullish retest. I'm not saying buyers must defend it. There's a higher probability that buyers will defend it, but that's not a certainty, right? It's just a higher probability. Right, so and the reason why I'm saying it like this, right, is I must still be able to define what a bearish scenario looks like. We cannot just assume that buyers are going to come in, defend this level, and crush it. Because if you do that, you're going to take the market long the first time it comes into this level, right, and then the price is going to rip and stomp you out, right? So you have to still be able to define what it'll look like if sellers take it, right? So price comes into 55117. Look at the beautiful buying we get right here. A beautiful Bayesian candle right here off 55117. I mean, it's flawless. Let me get rid of PDH because there's just too many lines on the chart. All right, and we have open print as well. So I have some pre-market structure here at 55238. We have pre-market high up here. Okay, so as of right here, we were live. I still didn't put on a trade. There was no trade for me. Right? This is kind of bearish, if you ask me, due to the fact we closed below the 50 EMA. We're retesting the cloud, even though the cloud is green. See, we don't short a green cloud. A green cloud means conditions are still kind of bullish. So we're patient. Even though this is a beautiful break below open print, beautiful retest of open print, right? The old Josh would have probably been shorting this, targeting 550.11, but the new and improved Josh knows I do not break my process. Right? My process is identify your areas of value, right? Identify a chart pattern at these areas of value, right? And then identify the relationship between price and the moving averages, right? So I have to be able to have all three of those aligned before putting on a trade. And you'll see, green cloud means strong buyers. Buyers take back end of day, right? And this bearish chart pattern here off open print gets invalidated on the next candle. If this candle was red, it would tell me that sellers were a little strong, but it wasn't. Buyers took this candle, right? And they took open print. Now we're back above the cloud. Now we're retesting open print once, twice, 3 times. See, as of right here, buyers are now owning the level. Sellers are trying, buyers are defending it. We rip above 55238. And now I'm going, okay, price is very bullish. I want to get in this long, right? So now there's a couple different ways you could do this, and I want to show you guys how I've been entering lately using the 2-minute time frame, right? So if I whip the 2-minute out right here, you're going to see price comes down into our area of value, right, which is 55238. This is our pre-market level, right? And I'm looking to trade. Once again, I'm going to whip out that 1 hour time frame over here because I'm looking to trade this bullish break and retest that we've identified, right? So now I'm looking to get in the market, but I can't just get in the market because I can only accommodate a 30% drawdown, right? So I have to get into a place that gives me good risk, right? So using the 2-minute time frame, using the 50 EMA, you're going to start finding some really good spots to get in the market, right? So notice how price rips all the way down to our 50 EMA, right? And then once we come into that 50, we get buying, right? So my rule of thumb when entering is I want to see this candle wipe out the candle in front of it. If I can see it, and when I mean wipe out, I mean I want to see, right? We're talking about this candle right here, right? This red candle. When price comes into that 50 on the 2-minute, I want to see buyers push price above the top, right? So once price comes into that 50, buyers shoot up and take out the top of that candle, I'm in the market. I'm in the market as of right then and there, and my stop loss is going to be below this candle, right? So you can see, guys, I am risking on this trade around 40 cents. Oh, that was wrong. Hold on. This is my stop loss right here. Once again, let me say this one more time. When price comes into that 50 EMA and then buyers start to reject, I need to see buyers wipe out the candle in front of it. If we can close above it, that's even better. But that's not always going to work that way. If you wait for the candle to close, sometimes the candle will get away from you. All what I ask is that you guys determine which works best for you. I've done both. When the candle wipes out the top of the previous one, I like to get in. That's what works for me. Helps me keep my risk in check, right? And of course, there's a bunch of other factors that I use to determine my entries, right? But that's one of them. I want to use that critical level. I want to use those moving averages, and I want to see that candle wipe out the candle in front of it. That's what I use. See, if you look it over here. Once price began selling off, none of these candles can wipe out the candles in front of it. See? None of them, right? That helps you determine it's trending down. So, and also, when trading this way, it's going to help you remain way more patient. See, if I just let price come into this area of value and then go, oh, and there's a nice wick coming off and I'm going to get in, right? Let me whip out the 5 minute and show you a mistake I used to make, right? So one thing I used to do is I would let price come into that area of value, right? And I would get a nice little wick and I would enter on this candle. See, entering on that candle may work great, but if you whip out that 2 minute, you'll realize you could have there wasn't one candle that wiped out the previous candle. So really there was no entry signal, right? Until price rallied and whipped and broke above the candle before it, price was moving down. But once that happened, there's your entry signal. You get your beautiful move to the upside, right? So now, once we took that long, I was now looking for another trade to add into this, right? Because this was a beautiful trade. We took it long. We took it long right here. Took a move all the way up here. Broke above pre-market highs. Scaled out. Left 30% of the position, right? And you could also see we started to come back down, right? But as I'm monitoring my trade on the 5 minute, there's no reason to get out of this long fully. Conditions are still very bullish. So where do I add into the market? Let's use that same analogy, right? I'm waiting for the candle to break out of the one above it. Now, there's a lot of things that you can't just pick any candle. It has to be around an area of value, and it has to be around your critical levels, right? You can't just pick any single candle. You have to, A, have your area of value, B, have your moving averages defining the trend properly, right? In this case, we're trading a green cloud, right? And you need your market structure, right? So using that 55239 level, right? For me to add into this trade, I was waiting to break above it. As soon as we broke above that level and we closed above it on this candle, I'm then adding into my position. And look what it looks like on the 5 minute, right? So we added into this position on this candle right here, right? Once we blew above the top of the one before it. See, little tips and tricks that are going to help you remain patient, remain disciplined, and capitalize on phenomenal trades. I hope you guys like this lesson. Make sure you hit a like, subscribe for more content, drop a comment. Any feedback, guys, let me know. And if anybody just wants to get involved with the Discord, needs someone to talk to, right, wants to be on our live webinars, click the links below. I'll get you in there.